Hey guys, David Robinson here. Welcome to the apartment investing journey. As usual, we have another great guest for you this week, and I'm excited to share his journey and his story with you. I think you'll have a lot in common with our guest, and he'll be able to share some insight that will help you along the way. Rusty Pollard, welcome to the show. Appreciate you coming on.
Hey, thank you so much, David. Really appreciate it.
Yeah, my pleasure. Excited to get into your story and hear a little bit about your journey. Just a little bit of a heads up to our listeners. Rusty's someone who started investing in real estate while working a W-2 job and transitioned out of that, and now is a full-time real estate investor. In fact, he bought a roughly a 50-unit apartment building while he was traveling the world with his family, and completely remote. So I'm excited to get into that story. Today, Rusty focuses on multifamily, commercial value add projects, and really leaning into partnerships and syndication to help him grow his business and his portfolio. So, Rusty, that's a real brief synopsis about what your world's been like over the last handful of years. And we want to get the whole journey, as we always do with all of our guests. And so let's back up and let's talk about, your first foray when you started thinking about real estate. How did you get into the real estate world?
Yeah, thanks, David. So my first real estate deal was just a small house. It had a basement apartment here in Utah when my wife and I were going to school here. It was 2011 timeframe. And just saw a lot of opportunity here. At that time, you could buy a house like that for $120,000 and rent the basement and cash flow positive while you lived in the upstairs. So that's how we got started. We just kind of scraped everything together. Scraped our savings that we had in our bank accounts and borrowed some from some family members, and took some student loans out for the renovation, that kind of thing, and got started.
I do have to jump in here real quick and ask the question of, why house hack, right? Like, how did you even think that this was something that you should consider doing?
Yeah, so I always planned on having real estate. Some people around me they've had a lot of influence and have been able to help a lot of people. And, they've gone on mission trips for their church and stuff for years. At a time. And I had to ask them, I said, how are you able to do this? And they said, we've got a couple apartment buildings and that's changed our life. So that's always been part of my plan, was to own real estate. Certainly not at, any kind of scale. I never planned on apartment buildings until I ran into people like that kind of changed my perspective and changed my mindset.
Gotcha. Love it. Okay. So you buy this first property, you and your wife scrimp everything together and you end up buying it, doing all the renovation, I'm sure, yourself and all that. Yep. Take us forward from there.
Yeah. So we did that. We had 2 years left in school. And so we did that in the springtime before we left for the summer on one of my internships, and rented out the upstairs while we lived in the basement while I finished the renovations down there. And, I grew up doing construction, so I'm pretty familiar with that whole process. So yeah, we came back from the internship, finished it up, and then we moved upstairs and rented out the basement. Like I said, positive cash flow for the last couple of years of school. And, we saw the light at that point. My wife thought we were crazy going into that. And so, yeah, we sold that, rolled that into our next house up in Seattle. It was another vacant foreclosure. Did the same thing, kind of unlocked that equity. And we were able to start rolling that equity through a HELOC into multiple other investment properties. We did start kind of going from, some single family type properties, started into duplexes. We did a few of those, jumped into an 8-plex and thought we were getting crazy, and so we just gradually started growing that way. And then, like you mentioned, that 50-unit apartment complex has been our biggest deal to date. So,
oh, that's great. So I'm curious, what took you to Seattle and how long were you in Seattle?
Yeah, so I got a job with a aerospace company up there and worked for them for about 5 years. And so I had a good W-2 job, had a good income, didn't have passion for what I was doing, but I certainly enjoyed, learning the business processes and being around the executives and whatnot that I spent so much time with. I felt like my career was kind of going left, and I wanted to go right and spend more time focused in the real estate industry. And that's kind of what brought me back down here to Utah.
Oh, that's great. So I'm curious then, when you were up in Seattle, that was about the time. So you basically used the funds that you'd built up from the original purchase in 2011. You guys used those funds to go buy another sort of like-minded type property up in Seattle. Yeah. And then you tapped the equity that you had built up in that property to invest in multiple other properties. At that point in time, were you investing locally in Seattle, or were you investing in other parts of the country, in Utah? What did that look like for you?
Yeah, that's actually a great question, David. Not necessarily by design. It just kind of happened this way. I've always invested, other than our live-in flip type setups. We've always invested out of state. So now, I've got properties in Colorado and Alabama, Minnesota, had some stuff up in Washington, so I've kind of been all over the place. But bottom line is I go where the deals make sense and where I'm able to find deals that fit my model, my criteria.
And so looking back then at that point in time in your life, obviously your model is a little bit different today than it was back then. But back then, just for our listeners, what was it that you were looking for in your investment properties?
I listened to a lot of bigger pockets at that point. I bought that first property and then stumbled across bigger pockets. I'm like, oh, that's what I'm doing. Okay.
Yeah.
But from there, I went to a lot of educational seminars. I took a lot of courses. I wanted to learn a lot. I spent a lot of time with other investors to kind of learn what they were doing. And so I would take models that I would see and be around and that I thought made sense, and I would kind of just try and replicate that, So for a single family property, I would often hit the 2%, price to rent ratio. And, so they were good, strong cash flow properties, but certainly at this point, taking down a 20 unit building is the same effort on my side as it is to take down a single family house. So I would much rather scale it.
Yeah. That's great. Okay, cool. So you started doing, you were up in Seattle, you had built up quite a bit of equity. You tap that equity, you start investing in other single family rental properties, high cash flowing rental properties in other parts of the country. You're still working your W-2 job, and eventually you make a transition out of that. Talk to us about that transition, because there's a lot of our listeners that are in that space, right? Maybe they've tasted the benefits of real estate investing. Maybe they do love their job and they want to stay there. And there's plenty of our listeners who, are really enjoying what they do professionally and plan on investing passively on the side. But there's others who are in that space where you were back then, trying to make this decision of, how do I exit my existing, W-2 and make this transition? How do I make this my job, this investing thing? So talk to us a little bit about your mindset and the process that you went through.
Yeah, to be honest with you, like I'd mentioned earlier, I felt like my career was directing me or going down a path that I didn't really want to go down. So my wife and I had talked about it quite a bit, and we just decided to kind of jump. So I had reached out to a group down here in Utah that I'd done deals with before, and they were looking for someone to come and manage their portfolio. And so it was a massive pay cut. I took a 2/3 pay cut to come down here and to redirect my career in the direction I wanted to go. But we went for it. We always have to take some calculated risks to, reach that next level or head in the direction that we really want to go. Same with real estate. In our minds, buying that first 8-plex was a huge jump, and it was terrifying, right? We thought we were taking on all this kind of risk. But you do have to take those certain calculated risks to reach the next level. So yeah, I took that job down here, worked with them for, 18 months, 2 years. And, it was good. I felt like that just made me feel a lot more comfortable in the operations of things. Bottom line, it just taught me that I could do it, right? Yeah. I wanted to work with someone and see how they worked it on building their portfolio. And I already knew it. So it was just time to bet on myself and go full time into it on my own.
Cool. That's great. And so at what point in time did you make the transition from single family to the eightplex. Where did that fit in on your journey?
Yeah, it was kind of a slow build, to be honest with you. Back in the W-2 days, most of the investing was just done with my own capital. So my wife and I were really intentional about not growing our lifestyle, in line with what my income was doing. And so we kept it almost a student level lifestyle, and we would save that extra and then go invest it, as well as unlocking the equity in our personal property. But yeah, I mean, it was probably.
Were you still in Seattle? Were you still in Seattle at the time, or?
Yeah. So
Gotcha.
it was probably 2 or 3 years from the time, we bought that first property and jumped up to the eightplex. We'd done a handful of other properties as well in the middle, but that was certainly a jump for us as far as mindset goes.
Yeah, I can imagine. Is there anything that any guidance or advice that you could give our listeners who are considering making a jump from maybe what they're comfortable with in the single family space into multifamily?
Yeah, I mean, to be honest with you, what made me feel more comfortable with that jump was we bought it for what we felt was just a no-brainer price, right? We kind of held to our fundamentals, our criteria, and we said, hey, if we can get it at this price, it's a no-brainer. We'll be able to make that work, like no matter what, even if the market turns again, even if rents don't jump up to where we think they'll go, it's going to float itself, and in the long run, it'll be positive, and this will be a good learning opportunity, if nothing else, without losing our shorts. So that's kind of how we went into that first bigger deal. Certainly that's a small deal for a lot of multifamily guys, but it felt big at the time. So yeah, I would say, be around the right people to help you feel more comfortable with those numbers, spend enough time learning, and then you've got to stick to your criteria and your fundamentals. Make sure that if you buy it at this price, it's going to work. That's kind of how I go into my deals.
Yeah. Love it. Okay, cool. Well, I wanted to push our conversation forward a little bit. And I know I teased this a little bit at the beginning of the episode. And so I'm sure all of our listeners want to hear, okay, how do you take down a 50-unit apartment building while traveling the world with your family? So let's talk about that. First of all, let's talk about you making the decision to go and travel the world. And 2, let's talk about the deal itself.
All right. So I can't take any credit for the trip overall and all the traveling that we've done. That's all my wife. I made the mistake, when we graduated college, we took a month and a half and we backpacked through Europe. And I thought, that would be a good trip and maybe we'd get it out of our systems a little bit, but it only stoked the fire with her. So she really loves to travel, and we've been blessed to do a lot of trips.
That's great.
So we've seen a lot of different things. So my wife came up with this crazy idea. She's like, she just came to me one day and she said, I think we need to go on a 6-month trip and just travel around, maybe do a country a month, and let's just go do it. We don't know if we're going to be healthy enough in a dozen years or whatever, when our kids are old enough that we could, take them when they're on their summer break in school. So it's either now or maybe never, and I thought she was crazy at first, to be honest with you. I was like, I'm trying to get my career rolling. I'm starting to get some momentum going with this investing stuff. Like, you've got to be out of your mind. But, credit to her again. She was pretty persistent and helped me understand, kind of where she was coming from and why. And so we just went for it. We sold one of our rental properties, one of the single families, and that helped fund it. I kept working my W-2 job while I was remote, and we just went for it. We rented out our house and traveled the world for 6 months. We did a country a month, and we had 2 kids in tow. So it was crazy.
That's awesome. What an inspiring story. That's cool. So talk to us about the process of sourcing and acquiring a 50-unit apartment building, roughly, when you're in, multiple other countries.
Yeah. I certainly didn't time it. I didn't plan the timing to work out this way. It just did. And we made it work. We came across that apartment building through a local contact here at a local RIA I'm a part of. And we went for it. I took the deal to my partner and said, hey, I think we can make this one work. Am I crazy for looking at a deal this big, And we crunched the numbers and we were able to, see some good opportunities with it. And we went for it. We went down there, performed some of the in-person due diligence. We assembled the right teams to take it down. We had to interview property management companies and general contractors and all that good stuff, that we had to set up the vendor team just like you do with any new project that you're doing, certainly out of your area. And we just kind of fine-tuned the plan, went through the environmental studies and the physical condition assessments and all that good stuff. And then we left on our trip at the end of the year. So, we finished up the negotiations on the deal, the partnership negotiations, closed on the deal, started the whole renovation and value add play while we were traveling.
Wow.
I would wake up at 1 a.m. in Thailand and be on Zoom calls for 4 hours, just keeping things rolling, as well as my W-2 job. So it was kind of crazy, but it just really solidified you can do this anywhere. You just have to have the right team in place, your own personal team and the team that services the property itself.
Well, and my guess is that you had a little bit of experience with that in the single family space, formulating a team. If you're investing out of state and working on BRRRR deals in markets that make sense, you have to have the team there locally too. So you at least had some experience of investing out of state. So I'm sure that helped. What were some of the challenges that you faced though along the way, being remote and doing a deal of this size? Remote doesn't really have much to do with the challenges that we faced with that one, to be honest with you. I did still have a partner of mine stateside to help me. He went down and checked out the property at least once during the whole renovation process. But the bottom line is, we were just managing the GC and the property manager at that point, and, working to the budget and all of that could be done remotely. There were no issues as far as, location goes. No, that's great. So let's dig into that deal a little bit. And then let's talk about, where your business is headed moving forward in the time that we have left. But so this was a 48 unit C-class deal. Maybe tell us a little bit about how you sourced it. I know you mentioned, sourcing it through a member of the local RIA, but maybe give us some context around, how they found it or ultimately how it was sourced and then what the business plan going in was.
Yeah, for sure. So that did come through one of our local contacts here. He had a partner that was doing some marketing down there and had come across it. It was kind of too heavy of a value add project for them to take on. And we felt comfortable with the deal and we went forward with it from there. We had initially intended to syndicate for this, bring in a group of investors to bring the capital, the equity side of it. And ended up finding an investor in my network that had some 1031 funds that they needed to place. And so we took the property down. So we had the down payment plus all of the renovation funds, which was about $1 million on its own, all from one source. So we ended up doing a partnership with them. And it's kind of a creative deal, right? It's called a monetized 1031. And so that allows you to wrap in the renovation funds within that. You still have to work through to all of the 1031 timelines, which was tricky. So we had to do 48 units within the 1031 timeline.
Oh, really?
Yeah.
You had to do you had to complete the renovations within the timeline. Is that what you're saying?
That's right.
Really?
So, yeah. So we did, roof, sewer lines, parking lot, renovated all 48 units within that time frame.
Interesting.
So.
Okay, cool. So I love you getting creative on that. So you basically, between you and your partner, you brought in a third partner who helped finance the deal and brought their 1031 exchange funds into it. By the way, where was it located?
Alabama. So Tuscaloosa.
Okay.
Yeah.
Cool. And what was the purchase price?
So purchase price ended up being 1.7.
Okay. And
so,
1.7 with did you say $1 million in reno?
Yeah. It's a big project.
Yeah. Okay.
Yeah.
So talk to us a little bit about what the property looked like when you acquired it, and then what your plan was going in.
Yeah. So certainly it had kind of been let go from the previous owners. So they had essentially run to fail most of the building systems, and their property management wasn't very good at all. They didn't have good records. They let in a lot of, shady characters as far as tenants go. So there was a lot of work to be done on the management side, as well as the building, facility as well. So we went in, we painted the inside, the outside, standard lipstick on the inside to get it up to a normal level of living standards, right? And like I said, we went through a lot of the building systems, the roof and a lot of plumbing, had to replace some of the main lines and stuff. And just basically went through the entire property and brought it up to snuff. So it was a heavy project. And then certainly in the middle of that, we were essentially turning over a lot of the tenant base that didn't want to be around good management and proactive management to make it a safe place for other people to live. So it was a lot of work.
Yeah, I can imagine. I'm curious as to, what the occupancy dropped to during your business plan and during the renovations. Do you remember?
Yeah, so there's obviously a lot of negotiations. It worked out well because a lot of the tenants were on month to month, and a lot of the tenants just kind of self-selected. So the ones that wanted to be around a renovated property, a property that was being taken care of, they were willing to pay, a couple hundred extra a month to be in a better environment. They said, I will stay. Let me move into one of the newly renovated units and you can have this one. So we were just kind of shuffling them around a little bit. We got down to about 40% occupancy. So we were able to kind of float the deal as far as cash flow goes while we were doing all the renovations. And then certainly now that it's all filled up and performing to plan, it's a great cash flow asset.
Great.
One thing I didn't mention, this is seller financed as well. So a mid-size apartment building seller financed is still possible. You just have to find the right seller.
Wow. Yeah, that's unique. You don't hear about that much these days. So that's great to hear. How did you structure the seller finance? What did the terms look like?
Yeah, so luckily most of that was already set up for us when we took it over from our contact. But it's a 5-year note, and we're in the process of refinancing into longer debt right now.
Okay.
And it was at 2.1% interest. So it was a pretty great deal.
Goodness gracious. Okay.
Yeah.
So they were basically just looking for an exit. They wanted to be able to get out somehow. I mean, what caused them to want a seller finance versus just cash out? What was their motivation?
Well, I do know that they'd shopped it around to some of their local contacts down there in Alabama. They're a good family. They are builders themselves, and this was just kind of lower in their priority list. They'd shopped it around to some of their local folks, and no one locally that they knew and wanted to hand it off to wanted to take on the property because of that heavy value add, heavy lift project. So you have to understand building systems and understand that whole process to, be willing to take on a project like that.
Yeah, I love it. Okay, cool. So you mentioned that it's you're about to, or you're in the process of looking to refinance. What does the building look like today? How's it performing?
Oh, it's great. It's a great cash flow asset. We essentially treat our partner who brought the funds in as a limited partner, right? So we give them monthly reports and give them monthly distributions, and then we take a profit split beyond that. It's worked out great and has met or exceeded our projections for sure.
Love it. That's great. Well, look, I want to transition a little bit, and let's talk about what your business looks like today and what you're looking to do moving forward.
Yeah. The last year or so, I've been on my own, doing my own thing without a W-2 for about 1.5 years now, coming on 2 years. And, the majority of that time has really been focusing on getting around the right people. So as you know, David, doing this business at any level of scale, you've got to have a team. You can't do this on your own. Single family is, possible, but once you start scaling this a little bit, you do need other people, specialists in the respective areas to be surrounded with.
Yeah.
So I've got some great partners now, and we're doing, new build and value add projects, multifamily and some commercial properties as well. So light industrial, storage, and some retail. And we are still all over the country, but it's really great, and we're having some great success. I can't take any credit for it. It's just being around the right people.
Oh, that's great. Cool. Well, look, you've been gracious with your time thus far, and I want to start winding down here. I've got three final questions for you. The first is, what's the biggest mistake you've made on your apartment investing journey that we could all learn from?
I would say number one is not surrounding myself with the right people sooner. I feel like I could have benefited from this last market cycle even more than I did. We've all benefited from it, right? But if I had done more properties and more projects and bigger projects, we'd all be a little bit further down the road. And then also, I think it just kind of goes in step with that, is working on my own personal mindset. I'm a very calculated, conservative guy, and I can make those calculated steps and progress slowly. But something that I'm being intentional about is getting out of my comfort zone and making bigger steps, and trusting my team that I've surrounded myself with, and just working on that mindset to do that.
Yeah, love it. I'm in the same boat. I feel the same way. What's the biggest win you've had on your investing journey so far?
I think we talked about it. It's surrounding yourself with the right people, and learning that I can do bigger deals while traveling at, in all corners of the earth.
Yeah, I bet. Yeah, that's a big win. Last question I've got for you before I let you go. What's the best advice you have for someone who's just starting their apartment investing journey?
Yeah, aside from learning the basics, right? We all need to know the basics to be competent in this arena. But I really just think you need to spend time networking and getting yourself around the right people. So whether that's a local meetup, which I put one on down here in Utah County, if you guys would like to come, happy to chat with you guys about that. Your local RIA, masterminds, coaches, mentors, all of that. You need to surround yourself with whatever aspect you really need to grow in. And that's made the most difference in my business.
Love it. Well, Rusty, you've got a great story that I think a lot of people will resonate with, and hearing about you, being inspired by some people in your life that talked about how real estate had such a positive impact on their lives and allowed them to go do greater things than, just working in a job. And then you having the courage to, leave the W-2, and granted, it was a transition for you, but, making that step. And then, having the courage to take the step to acquire a large commercial multifamily building and be out of the country while you facilitated the whole thing, and what you're doing moving forward. So what a great story. I appreciate you being willing to share and helping our listeners on their journey. What's the best way for our listeners to connect with you, learn more about what you have going on, or potentially even invest or partner with you in the future?
Yeah, absolutely. And thank you, David. Probably the easiest way to get a hold of me is to go to my website, propertieselevated.com, or feel free to send me an email, rusty@propertieselevated.com. Happy to chat with you guys.
Great. And we'll have all that info in the show notes. So if you're listening right now, just drop down in the show notes right there, click on one of those links, connect with Rusty and his team. Rusty, again, thank you for taking the time to share your journey with us. And I look forward to connecting with you again soon.
Hey, thank you so much, David. Have a good day.